All right, welcome. I want to look at a few markets from last week, specifically the yen 20 minute, USD yen 20 minute, and then we'll look at the the S&P E-Mini on a tick chart. And what I want to do is a bit of a continuation from the last post. I want to use simple things like swings and the three types of trades, not just as setups, but for us to use them so that we can learn how price moves. We can get the rhythm of price, learn how price moves. So just a reminder, we're just mapping a market with swings. We take all this gobbledygook and we map it. A new low confirms a high, right? You make a new low, we confirm a high. New low, new high. And then we make a further distinction. This is also a swing, but we'll call this a minor and we'll call that a major. And we're deciding that based on the reaction leg, impulse leg. There's components to a swing. So the biggest reaction leg in our frame is going to be the major. The next biggest is going to be the minor. And so with this kind of information, let's get an idea about how price moves, and then we can work on how to design ways to take advantage of that. So we want to map all of this gobbledygook here. You can just draw a line and say, okay, I got a new low. Like that. This is the reaction leg. That's the impulse leg. That's the biggest reaction leg in my frame. Then I can turn around and say, okay, I also have a swing here. Make it a different color, red, right? See, it's different animal, different size, different relationship going on here. It's a matter of relationship. When we understand this thing about relationship, we can then draw and measure, no matter what tools you use to measure, very precisely. So now that we can do this in a chart, I want you to see basically how our week went, right? You start and you map. So as we came into Sunday, here is where our week started. We can see we're following a market. And basically what you want to do is anytime price starts upwards, you can measure both. If following two of these starts to become overwhelming, skip the minors and do the majors. So right now we're doing this following. I'm not teaching you how to do a trade via a formula. We're following. From there, you can come up with a lot of different trades. So we see, okay, price reaches about the length of the minor and makes a new low. Sunday rolls around. Right here, this begins to give us a sense that we can read a market, right? This is different than putting on some magic number from an old dead mathematician and saying price should stop here, or putting on some action line and reaction, price should stop here. It's based on swings, these things. It's not magic or saying there's a probability to this. The context is always different. So we want to start simply. It's very important to do simple in trading. It's enough going on. When it starts up, we measure. So let's just use this to see what we can learn. Right? It turns, it's trying to make a new low. And it doesn't. It changes its mind. So we look at the major. Let's see what happens. So now we're into last week. Notice I'm not going into all of the little detail here. And so there, we're starting to learn something about the way price will often move. Okay, we're not counting waves or doing any other of that stuff. There's nothing wrong with all that stuff as long as you understand and not being used by things. So if I draw a model, what I've learned is that In this case, price came down, made a couple minors that were the same size, came over here. 1, 2, 3, tried, and then rolled right into the major. So we saw how little swings grew up. Now, we can understand this via supply and demand. We broke a new low. They're in a hurry. They're pushing, right? These are like pushing trades. They're pushing. They're pushing. See, they're pushing this line down here, right? They're pushing. They're pushing. They're pushing. And then they said, no, we're going to expand. It's very normal for price to do this. So rather than teach you to do something, you can start to see this on a chart. And then now, right, you just follow your majors. And that's current. So we can see how price moved this week. And it's just in swings. Right? It's just in swings. So now I can go like this. Say, all right, we have these red swings coming down. And then it basically just turns into a blue swing. It makes a new low and comes back up. Okay? That's all that happens here. And if we take the bars off, you can see it's just little swings, right? Little swings growing up to be a big swing. And that maps the market out. And of course, we can learn to do lines on these guys. But that's next lesson. All right, now let's take a look at the ES. The ES was a nice case this week. So imagine this. You come into the morning. Okay, this is Friday morning. You come into the morning here, Friday morning, ready to trade. Just do your own mapping here. All right? Remember, a new low confirms the swing high, and then we project it. So you want to be able to, and you can see that this is a swing, right? You can see, right? They come here, they give it a try, and then you see it start to expand out. And so we measure. So you come in and measure. Okay, about that big. All right, price rolls. See, that's the major swing. And generally, if this one's a little bit bigger, I'll take the current there. Okay. So we have a handle on this now. We have majors. Right? That's the biggest reaction leg on the board. So as you're following this in the morning, you can say, all right, there's my minor. See how I'm dicing this out? And now I have a choice anytime price pops up to think about, all right, are they going to push the minors? Or are they going to push the majors? Or are they going to reverse it? So anytime price rolls, I'm measuring, right? I'm getting a handle. I'm feeling this. So this would be like a push trade, right? You're pushing the minors. So the three types of trade are always relative to whatever you're looking at. In this case, we're looking at minor and major swings. So pushing, you can generally consider minors are going to be the pushing, right? They're in more of a hurry. It's more momentum. It's not that one's better than the other. And anytime price pops its head up, you measure. And then we don't get many days like this. Um, depending on your experience, you'll see days like this in the ES where it just takes the whole day and decides it wants to sell off in these nice, pretty swings. But we do get days like this, and when you recognize them, you can trade. And I'm not so worried about being perfect as to, okay, I'll trade something. If I get stopped, okay, I'll go the other way with it. There's a difference. All right, we expand a little bit. There's something to see, right? We drop down, we hit that, we go beyond it. So now, even though the swings aren't big, we still meet our definitions of this is the largest reaction leg, this is the next largest. You can see quite an organization in here. And we turn on the major. And as price rolls, we can start a new set of minors again and majors. So this was our market all the way till the close. So you see it is very organized. Minors, 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 majors. So we can use this to learn how price moves.